But this market lately has been something else. And it brings us to a big question to open up today's show. Are ETFs, which are ostensibly designed to minimize risk, actually creating more big swings? Case in point, last Friday, when at one point every 145 stock in the IBB Biotech Index was down. Different companies, different industries, different levels of success and profitability, and yet all down. Let's bring in Herb Greenberg, as well as Tom Lydon, editor of ETF Trends. John Najarian is going to join us in just a moment. Herb, it's good to see you again, buddy. I know you and I have talked about this. I'm not knocking ETFs. They're cheap. You know, they give you broad market exposure, but one wonders, are they not making the selling and maybe sometimes the up moves a little more exacerbated? What do you think?
Well, look, obviously nobody knows for sure, but to say that they're not would be kind of silly. When we were talking about ETFs a few years ago, back when we were raising some warnings about it on CNBC when nobody really cared, the whole question was whether this would be the tail wagging the dog. And now you look at what happened in the market, and specifically, I think it's very interesting. Back about 4 days ago or so, there was a great story in the Wall Street Journal about this, and the guys from BlackRock, and you have to give them credit, said that on August 24th, which before the past few days was the real, impact of the market, they concede there were some issues with ETFs, that they had structural issues that they hadn't thought about before. And then they came back and they said, well, it's all volatility limits in the market, and we have to learn how to live in a more volatile market. But that gets to the point. ETFs are now part of the market. And when you see the way those biotech stocks went down just yesterday alone, come on, forget about high-frequency trading.
And Tom, the biotechs are really what caught my eye, but it's not just them, and I'm not picking on the IBB or ETFs or one sector in general. But if I own an ETF that owns 40 stocks, let's say, and I sell that ETF, or if I'm a computer or I'm a hedge fund and I sell that ETF, I'm dumping 40 or 50 stocks automatically. Does it make the volatility worse?
Well, they're part of the ecosystem, I think, as Herb's saying. And not to defend it, it's really what it is. ETFs are $2 trillion now. But to put it in relationship to the mutual fund industry, that's $14 trillion. You can't really track the buying and selling intraday within mutual funds the way you can with ETFs. And that's why, to a great degree, they're under the spotlight. But is that really a bad thing? And I think regarding August 24th, what Herb was saying, the idea there were system breakdowns that were going on the exchanges. There were periods of time when the market was halted for different securities. It wasn't ETF's fault. That was the underlying securities that were halted. And because of that, ETFs were affected. So I think there are two different issues. Number one, ETFs surely are part of the ecosystem today, and we have to get used to it, and I think we need to embrace that.
Dr. J, I want to go to you because it seems like, if you're to take a look at who's going to be hurt by some of these wild swings in the ETFs, it might be the individual shareholders of, let's say, and just to continue using the biotech ETF as an example, the individual holders of a Gilead or a Celgene who might just, you hold those couple of stocks, but then you get these institutions who are making large-size bets on the ETF itself, and so that triggers automatic selling of these individual shares. I guess the question is the tail wagging the dog or vice versa here?
Certainly it can, Mel, especially since in the example we're using, the IBB, instead of having a robust future like the S&P 500, where you've got futures options, index options that you could hedge with. Instead, you're basically doing a basket of those stocks. So you are indeed smashing those stocks or buying those stocks, to give both sides their due, when you're getting into or out of those big ETFs. That has a marked impact on the market, and obviously on August 24th, 16% move out of the IBB that day. We got right back to it yesterday, Mel, on an 8% drop, and the turnover yesterday was phenomenal. In the IBB, it was, I think, 11.8 million shares of that ETF. It only traded about 4.8 on that big 16% move in August. So yes, you're exactly right that some of the babies are going to get thrown out with the bathwater, one of my favorite expressions, when you have this going on, because people have to assemble those individually rather than trading a robust future or index option or anything else against it.
John making great points as usual. Tom, are there too many ETFs?
Well, we really don't need all the ETFs that we have today. However, we continue to see innovation. and this whole smart beta evolution has actually been fantastic, because now advisors and individual investors, rather than going to ancient indexing, can actually have some type of creativity, but with that is inherent discipline, and many investors need that discipline, especially during these tough times.
Herb, final comment?
I'll say it's kind of interesting because ETF companies have come to me asking me to start an ETF, and let me tell you something. If I ever start an ETF, I will tell you that will be the top of something, and perhaps ETFs.
Well, given your commentary, Herb, if you ever did that, we'd make fun of you. So
I know you would. Doesn't mean I wouldn't do
Come
it.
on,
but
Herb.
I know you would.
You can do it. You can do it.
The Greenberg top. If you ever roll out an ETF, thank you, Herb Greenberg. John, appreciate it. Tom, Blyden, thank you both very much.